Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do one comparative revenue statement when profit and loss account is given in the question. Let us read question. Prepare comparative revenue statement in vertical form from the following details. Opening stock. This will be part of cost of goods sold. Purchases, cost of goods sold. Interest on debentures, finance cost. Depreciation on furniture, administration expenses. Depreciation on machinery, part of cost of goods sold. Administration expenses, selling expenses, carriage outwards, selling expenses, loss by fire, non-operating loss, wages, cost of goods sold, provision for tax, less from net profit before tax. Sales, first item, sales. Closing stock, we have to deduct while calculating cost of goods sold. Dividend, non-operating income. Profit on sale of machinery, non-operating income. Nilkamal Limited comparative vertical income statement. To amount column to record actual amounts. This column is to record absolute increase or decrease amount. Last column is percentage increase or decrease. We have to first start with figure of sales. Sales 45 lakhs, 60 lakhs. Less cost of goods sold. There we have opening stock, purchases, depreciation on machinery, wages, and we are required to deduct closing stock. Cost of goods sold we got for 2013 24 lakh 6,000, for 2014 34 lakh 80,000. This will be deducted from sales to arrive at gross profit. Gross profit we got 20 lakh 94,000 and 25 lakh 20,000. From this we are required to deduct operating expenses, office and administration expenses, depreciation on furniture, administration expenses. Total office and administration expenses 3,09,000 and 4,56,000. Next, selling and distribution expenses. Selling expenses, carriage outwards. Selling expenses 4,56,000, 7,53,000. Carriage outwards 75,000, 3,15,000. Total selling and distribution expenses 5,31,000 and 10,68,000. We can add now all these operating expenses to arrive at total operating expenses. Total operating expenses 8,40,000 and 15,24,000. These will be deducted from gross profit to arrive at operating net profit before interest. Operating net profit before interest we got 12,54,000 and 9,96,000. From this we are required to deduct interest. Interest on debentures 1,50,000, 1,50,000. Operating net profit after interest 11,04,000 and 8,46,000. To this we'll be adding non-operating income, dividend on shares, profit on sale of machinery, non-operating incomes. Total non-operating income 36,000, 39,000. This will be added to operating net profit after interest. From this we are required to deduct non-operating expenses and losses. Loss by fire 15,000. Net profit before tax 11,40,000, 8,70,000. From this we are required to deduct provision for tax. Provision for tax 5,70,000, 4,35,000. After deducting provision for tax, we got net profit after tax 5,70,000 and 4,35,000. We have completed vertical income statement. Now we'll find out absolute increase or decrease between 2 years. What we are required to do is, from the figure of second column, we'll be deducting figure of first column. If we get positive figure, it's increase. If it's negative, will be decrease. Increase 15 lakhs. Opening stock 3 lakh minus 2 lakh 25,000. Increase 75,000. Increase 9 lakh 60,000. Decrease 6,000. Increase 1 lakh 5,000. Increase 11 lakh 34,000. Increase 60,000. Increase 10 lakh 74,000. Increase 4 lakh 26,000. Depreciation, both the year it is same, no increase, no decrease. Increase 1 lakh 47,000. Selling expenses increase 2 lakh 90. Carriage outwards increase 2 lakh 40,000. Total selling and distribution expenses, there is increase 5 lakh 37,000. Total operating expenses, there is increase 6 lakh 84,000. Decrease 2 lakh 58,000. Interest, both the years amounts are same. Operating net profit after interest decrease 2 lakh 58,000. Dividend increase 27,000. Profit on sale of machinery. In second year there is no such item, so there is a decrease. Loss by fire, there is increase. Net profit before tax, there is decrease 2 lakh 70,000. Provision for income tax, there is decrease 1 lakh 35,000. Net profit after tax, there is decrease 1 lakh 35,000. We have calculated absolute increase and decrease. Let us calculate now percentage increase and decrease. We are required to find out now percentage increase or decrease. So formula here is column number 3, that is absolute increase or decrease, divided by column number 1, that is the figures of 2013 multiplied by 100. Here sales 15 lakhs, increase is there, divided by 45 lakhs multiplied by 100, 33.33%. Opening stock increase 75,000 divided by 2,25,000 multiplied by 100. It is 33.33%. Purchases increase 9,60,000 divided by 22,50,000 multiplied by 100. 42.67%. Depreciation on machinery, there is decrease by 6,000. 6,000 divided by 36,000 multiplied by 100. 16.67%. Wages 53.85%. 41.91%. closing stock 20%, cost of goods sold 44.64%, gross profit 20.34%, depreciation on furniture, both the year it is same, admin expenses 50%, total office and administration expenses 47.57%, selling expenses 65.13%, 320%, total selling expenses 101.13%, total operating expenses 81.43%, operating net profit before interest 20.57%, operating net profit after interest 23.37%, dividend on shares 225%, profit on sale of machine there is decrease 100%, non-operating expenses lost by fire it is there only in second year, so there is increase of 15,000 but it will not be applicable because we cannot compare the figure of original, that is the base year, as it is nil last year. Thus we have completed comparative income statement. Formula here we are required to remember is figure in third column divided by figure in first column multiplied by 100. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.